It's about that time of day again. My name is Joseph. Wednesday evening, October 10th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Crude is bearish and trading at the low of a channel this evening, so my plan is to stay patient and look for selling opportunities off the highs of that channel tomorrow morning. The S&P is bearish with a strong run lower, just a little bit bearish here. That tells me to look for selling opportunities using buyer failure patterns above the moving average tomorrow. Nasdaq is also bearish with a runaway market this afternoon. That tells me to look for selling opportunities, but I can always keep an eye on those spike and range patterns after such a runaway day. We'll take a look at the Nasdaq in a moment. Gold is bullish right now, but trading at the high of that range we talked about from last night. That tells me to look for selling opportunities using buyer failures and the 2-try rule tomorrow. We'll grab the gold chart in just a moment. And of course, the euro is bullish and trying to complete the pendulum swing target. And once it does, then I'm looking to short this market. And I've got to wait for another one of those failures on the euro tomorrow morning. Boy, we had some insanely strong trends in today's session. A great example of a time when your average indicator is ultimately useless. So tomorrow, ditch all the indicators and we're focusing on market psychology combined with simple and reliable technical analysis tools. And of course, as always, I've got a great plan of attack. But before we put the charts together and put this plan together for tomorrow, I need to remind you, if you're watching me this evening on YouTube, you can find a detailed description of this entire trading strategy written out right here on my blog here at Sideways Markets. I'll leave all the links in the description of that YouTube video. Also, if you have any questions about anything covered in tonight's video, please remember you can post them in the comment section below. And if you like what you see, please don't forget to subscribe to our YouTube channel. And when you do, hit that bell icon so you get notified every time I post another video. And of course, if your goal is to become a consistently profitable trader, don't forget you can get that transformation started by going right to the blog here at Sideways Markets and make sure you join our mailing list. Also, don't forget all the charts for tonight's video are attached below this video, right below the video tonight on our blog. And if you have any questions along the way, please don't forget you can always call toll free or use that live support tool in the upper right-hand corner. Sound like a plan? All right, boy, we got a lot to cover here tonight. Had a great day today. Hope you guys did as well. But as always, we are only as good as our next trading opportunities. Let's get ready for tomorrow. Tomorrow's Thursday, October the 11th. Tomorrow is the day. Tomorrow's the day where everything gets kind of crammed into, right, that Thursday session. Monday was a holiday this week, so of course everything got pushed back to tomorrow. So all the news is lined up for tomorrow, and ultimately it's going to be a pretty busy day. Tomorrow's probably going to be a pretty busy day. We get the CPI number at 8:30 Eastern time. Whenever I think about CPI, right, consumer prices, I think about inflation. When I think of inflation, I think dollar, I think currencies, I think metals. So of course for me, I'm watching euro, I'm watching gold for tomorrow morning. We also have the jobless claims report at 8:30 Eastern time. I don't expect that to play into this too much. I think that CPI number will be on everyone's radar tomorrow morning. Then a couple hours later, we've got the 11 o'clock petroleum status report. Now, believe it or not, I actually appreciate having this at 11 o'clock on Thursdays. Remember, usually this report is at 10:30 on Wednesday mornings, and it really cramps our style because, it interrupts our morning session. Tomorrow, we're going to get almost a full morning session out of oil. When the news report is at 11 o'clock, my cutoff on oil trading will be at 10:45 Eastern time. So keep your eyes peeled on that one, right? Usually when the news report's at 11 o'clock, you're going to have a difficult time trading oil after that news report. You'll have to wait until about 12:30, 1 o'clock to get that last hour of trading. So get to it early tomorrow before 10:45. So time is definitely ticking tomorrow for all the crude oil traders out there. And again, if you're going to plan on trading it after the news comes out, I would stay away. My plan is always to stay away after 11:30, and usually you'll find some stuff right 1 o'clock to 2:30 that'll pit close right on crude oil. But as always, my plan is always trade in the morning session. That's where the best opportunities, the most reliable opportunities will usually come. Today was obviously a bloodbath in the afternoon. It's not going to be like that every single time. Most of the time, though, your best trades will come in that 8 o'clock to 11:30 time slot. So tomorrow morning, CPI number gets us started early at 8:30 Eastern time, and of course we got that petroleum status report at 11 o'clock. And don't forget, 10:45 is my cutoff on that oil trades tomorrow because of that employment number or that inventory number at 11 o'clock Eastern time. Don't forget, tomorrow we open up our trade room 8 o'clock Eastern time, and we're going to execute this entire strategy together. So come out and join us. Starting off tonight, let's open some charts up. We got crude oil, S&P, Nasdaq, gold, and of course, how can we forget about that failure we called last night on the euro. Let's jump into our crude first. Crude is bearish with a channel on the chart this evening. That's pretty much all we have to work with. The bears have clearly got the momentum at their back. The wind is at the back of the bears right now with that strong run lower. And, you know, really, the lack of really any pullback right now tells me that anything that rises higher is probably going to be seen as a selling opportunity. The market's bearish. I want to be a seller at resistance. It's also important to remember that anytime we see such a strong, large move in one direction, the following day is oftentimes going to be a trading range. And this will apply to both the oil and, of course, the S&P and the Nasdaq today, which, unless you've been living under a rock, right, you probably saw that straight line down today, right, on those charts. So we're bearish. We want to sell at resistance. We're going to keep our eyes open for a trading range. Most important thing right now is, where's my levels of resistance? Now, kind of deconstruct this real quickly here. If I take this channel out of the picture here real quick, you'll notice I'm just lining up these lows, bring it up to these highs, and that's going to give me a key level of resistance. My goal as a professional trader is to combine that level of resistance along with an entry pattern, right? Go with that momentum. The momentum is bearish, and then combine this level of resistance, right, with that entry pattern. So that's the plan for tomorrow. Now, if I swap this out and put this spiking channel on, which I think will probably end up being the more actionable tool tomorrow, right? If I connect these two lows and bring it up to that high, this thing just fits like a glove. It just fits like a glove when you add on that halfway point to that channel. So that's going to be another level of resistance that I can use. So now you can kind of see, if I kind of deconstruct these channels, right? Now you can kind of see where I'm getting this little sliver of resistance, right? That's the difference between the channel and that spiking channel. At the same time, it's very easy to see that there's going to be resistance up around this 73.72 to 73.40 area. That will also be a key level of resistance. So resistance is pretty easy to come by. All we have to do now is ultimately wait and see if we can get this move going higher. Here's some good patterns to look for, right, as we go higher. Ultimately, it's probably going to look something similar to this. We went above the moving average, pulled back. You can see those buyers tried again and then collapsed. That's ultimately what I'm trying to do. I'm trying to get this market up off the low, get it up into resistance. Then that'll put us above the moving average. Now, once we're above the moving average, now we can anticipate those buyers. They're going to try to come in and they're going to try to buy that pullback. Again, much like this, up, pull back. You can see how they tried to buy it, right? You got to look at, you got to kind of read inside those candlesticks, right? But that green candle right there, that big wick at the bottom tells me that buyers came in and tried to buy that dip, right? They tried to buy that dip, and when it collapsed or when it failed, everybody sold into that failure. So that's ultimately what I'm looking for here tomorrow. Incorporate that level of resistance, get those buyers to take the bait, right? Get that hook right in their gill, right? Get it in. And then, of course, now we know where their stops are. Now we can look for that combination of a two-try failure into that hidden channel pullback. Two-try failure into that hidden channel pullback pattern. So basically what we're looking for a retest of that low, right? Look for that retest of that low. And again, I want to go up into resistance. Wait for those buyers now to try to buy the pullback. At this point now, we know where their stops are, and I can sell right into those stops. Momentum is bearish. The odds are not on the side of the bulls. I can sell. I can use those stops for those bulls to kind of slingshot this market right back down again, because when the buyers get stopped out, what happens? They become sellers. And so when the buyers are selling, that's when everybody's selling, right? And that's what I want to be selling short. Now, from there, I've got that two-try failure pattern. From there now let's grab those lows. Let's bring it up to those highs now, and now let's grab that sell. Now, we don't always get this pattern, but that's another great opportunity. It's a two-try failure right into that hidden channel pullback. Great opportunity here. Get that moving average coming over. You're selling at resistance, looking for the entry pattern right as we go lower. Now, another option here we want to consider is, what if we go sideways? Again, we saw a big move down. It's a small move compared to the S&P and the Nasdaq today. We'll talk about that in a moment. Whenever we see this much movement, right, in one session, the following day oftentimes goes sideways, especially with tomorrow being the inventory day, right? 11 o'clock Eastern time is that inventory report. So, we already know time is of the essence tomorrow. Let's think about this if it turns into a range. Right? What would a range look like, first of all? Well, first, it starts off with double bottoms, right? So we got the one bottom. If we see it bottom out again and keep bouncing here, if we can see double bottoms here, or maybe a triangle as well, right? Triangles would also be in play here too, right? If we start seeing it get narrower as we go, right? These would obviously be ranges. So let's play that game here. What if it goes range bound? Rather be a triangle, right? Or it be a true range here. What's the plan then? Well, now the plan is to fade the breakouts and sell up above the high of that range. And again, we're going to use something very similar, right? It's called the two-try rule. We're going to wait for the buyers to try to make a run for it. Then that moving average will usually come up. We'll let the buyers try to buy it again. And then we're looking for the proper signal candle, right? The proper signal for the sell back down to retest that low, right? Now, sometimes these can be really big breakouts. You'll see them on gold here in a second. Sometimes these breakouts go really, really strong, right? So don't be intimidated by that breakout. Wait for that second attempt. And then I'm telling you, right, more times than not, you're going to see that big wick, and it will drop right in, and we can sell that sucker right back down to retest that low. Two-try rule up above the high of that trading range. Now, I know what you're thinking, but Joe, what if it keeps going lower? What if it just keeps grinding lower here? What if it keeps going lower? Then this turns into a spike in channel pattern, right? Spike in channel patterns tell me to look for traps. Find those prior swings, go up and look for that trap high. And again, this point, right, we'll try to use all the trend lines overhead, but you're looking for trap patterns, right, as we go higher, right? So if we do keep going lower, that's going to really tell another important piece of this puzzle, and that will tell us to be focused on trap patterns going highs, right? So at this point now, we've talked about the two-try failure pattern, the two-try failure for ranges. We've talked about the hidden channel pullback pattern, and we've talked about the trap pattern. I want to teach you more about this, but I've got to keep going because we had a lot to cover right now. So if you want a deeper dive, if you want to learn more of my favorite patterns, if you want to learn everything about channels and spiking channels and all kinds of great stuff, and not to mention hundreds of examples of each of these traps, two-try failures, right? How to use these patterns on real charts. I've got a great free trading course in the upper right-hand corner. You'll see a little pop-up up come across the screen right now. If you're on the blog at Sideways Markets, there's a button for it right below the video on the blog, or if you're on YouTube, it's also linked up in the description as well. So basically three different scenarios here. One is we go up, fail back down. Two is we go sideways, and we wait for that one try, two try. Three is we go lower, right? And then what do? We wait for that trap high. Only thing we haven't covered is how does it turn bullish, right? What does a reversal look like? Well, first of all, anything that moves this much in one day, we're going to have to see some strength if we're going to call this, right, a trend reversal. So right away, be very careful. As I mentioned in the introduction, in these types of moves we saw today, your typical momentum divergence, reversal clues are going to be worthless. And that's one of the biggest reasons why you don't see me using a lot of oscillators, is because when the markets are at their best, you can't really use them. They're all going to be oversold or overbought. So one of the big reasons why I always recommend traders actually learn how to use a moving average, how to use trend lines, ranges, and channels. And again, you can learn all about that stuff inside of that free trading course that I linked up in the upper right-hand corner. So bottom line, though, is what does a reversal look like? Well, I call these a 1, 2, 3 reversal. And the key is there is an exclamation at the end of that. What do I mean by that? Well, it needs this. It needs 1, a strong move through the moving average. 2, it's going to pull back to that moving average. And 3, we have to see an explosive, right, reversal, that strong punch going higher. It's this punch going higher that clears the way here for us. Now remember, if we don't get that punch, what's going to happen is if we just kind of lollygag our way higher here, right, now we know where stops are. And once we see that nice strong signal, that's going to give everybody the green light here to run those stops and sell this thing all the way back down to that low. So don't be trying to predict those reversals, right? 1, 2, 3 reversal. Strong move up, that's 1. Pull back to the moving average, that's 2. You're not buying this pullback, right? You're waiting to sell it as it fails. If it jumps off the moving average, now we're talking. Now we have a level we can use. How do we trade it? First, mark up the high of that first move higher. That becomes key support. Then mark up the high to high. That becomes our channel now. And now your sweet spot is right up in there, right? That's where your sweet spot is, right up in here, right? Looking underneath that channel low, right, to that channel low, to that reversal line low, right there, right? That's your sweet spot right there. Now look for that pullback, right, and buy on the way back higher. I'll tell you, I would love to think this market will reverse, because this will be nice, easy, right, easy going back up to retest those highs around 75. But I'll tell you right now, when you look at a longer term chart here right now on the crude oil, you can easily see here that $71 a barrel is really standing out right now. We'll see what tomorrow brings. Obviously, tomorrow's inventory day, so and I'm not somebody to call big targets like this. We know we're bearish right now. It looks like 71, though, is where these guys are probably going to be trying to get to, right, in the medium run here. We'll keep our eyes open for that big runner tomorrow if we can get into something here worth trading off levels of resistance. Grab that free trading class. In the meantime, let's keep going. Let's grab some S&P here now. Okay, S&P and Nasdaq are almost the same situation here right now. And you'll notice I've had to go out to a 6,000 tick chart on this bad boy. I get that question a lot. Why do I use different time frames on my newsletter? It's because if you try to use a 4,000 tick chart right now, you're going to need to put 3 monitors back to back to back, right, to get it all to fit in there. So if you're ever wondering why I apparently have no real logic to my time frames, what I'm doing is I'm trying to use a slow enough time frame to get my arms around this thing, right? If you were to use a 3,000 tick chart right now, there's going to be thousands of candles on here, and it will be too much noise. You won't be able to really get that much out of it. In fact, even looking at this chart right now, I probably could have gone to an 8 or a 9,000 tick chart just to be able to get my arms around the amount of data. I mean, we had 3.9, I think almost 4 million contracts traded today on the S&P. So you've got to adjust, right, based on those current market conditions. And again, on days like today, where you get such a strong run lower, kind of a capitulation, if I can use one of those big fancy words, right? They probably teach in school somewhere, right? This big drop off the highs here, indicators are not going to give you reliable signals anymore, right? Every single momentum indicator, every single oscillator, moving average crosses, they're a waste of time on days like today. You've got to know how to use a single moving average, right? Some trend lines and some ranges, right? So we'll talk more. We'll talk more about that in our free trading class. We teach that all in the free trading class. But right now, though, it's pretty easy to see. We're bearish. We got a runaway channel this evening. The bears have control, obviously, right? The bears are obviously in control right now. Strong run lower. Anytime I see this much movement in one session, the following day is almost always a trading range. So knowing this, my plan is to anticipate the bull breakout and then look for selling opportunities using that two-try failure pattern. I'll tell you what you're not going to do. I'll tell you what I'm not going to do tomorrow. Right? This market has not gone too far, right? It is not a great time to buy this market right now, right? That is the version 1.0 of me, right? That's JJ 1.0, right? I would have been the guy saying, "Oh, well, look, there's a Fibonacci extension. This is the 1618 down here. I better start buying." No, right? No. I don't care what momentum indicator is firing off divergence right now. Yes, we are seeing lower lows. I don't care if you're seeing higher lows on your MACD. This is not the time, right, to be buying this market. There's ultimately three scenarios you want to be waiting for tomorrow. Scenario one is the hopefully we get this, a nice strong correction followed by those bull breakout failure and run back down. The old two-try, right? Now you see us, now we're bullish, now we're not, right? That's the game. That's the holy grail for tomorrow. Free up some nice profit for us so we can run this back down. Another option, which is probably going to be more the case tomorrow, would be that trading range environment. Strong move down into that trading range. Nobody wants to take all their profit yet on this short because they think it might keep going. At the same time, though, hell no, I'm not going to buy this market right now. So the buyers are scared stiff. The sellers are fat and happy. They're not going to take profit yet because they're hoping the sky falls again tomorrow as well. So the market will just go sideways and it won't pull back. If that's the case, then we look for that one try, two try, right, that proper signal, and we're looking to sell back down again. Then, obviously, the third scenario here would be if we keep bleeding lower, right? Much like we talked about, right, on the oil. If we do bleed lower here, all it is psychology. It's market psychology. Nobody dares to buy it, but nobody's taken profit yet. So what will happen is we'll mark up those prior swings, and we're looking for traps, right, as we go higher here. And then obviously there is always potential for a reversal tomorrow, but I'll tell you right now, the graveyard of was formerly a trader, right? The graveyard of professional traders is littered with headstones that say he tried to buy a bear market, right? He tried to call a bottom. If you're trying to call a bottom in a move like this, you better have some deep pockets because it's very difficult to time the bottom on a market that keeps moving like this. And I'm sure most of you probably have already had that experience, so I won't beat that drum too much. The bottom line, though, is the only way I can feel confident to be a buyer here is if I see that 1, 2, 3 reversal, right? 1, strong move up. 2 is that pullback to the moving average. And again, everyone's going to be waiting for that to fail to sell that back down, right? That's where the easy money is going to be tomorrow, right? The much more difficult money will be predicting this breakout higher. Then, of course, what I'll do is once we get that turn in direction, I'm going to mark up that high, mark up this channel, right? And then we know where our sweet spot is, right? Our sweet spot is right there between the low of that channel, right, and that reversal line, and we could look for that buy going back up to retest that high. Now, as you can see, I've got this channel written on here. I've got good luck finding a channel, right? Don't even worry about a measured move. Again, most indicators on days like today are just not going to be effective, right? No matter what they are. The only thing you can really trust on a day like today is a moving average, and make it one. You'll notice I always use one moving average. I don't have all kinds of moving averages because you only need one. The more tools you have, the easier it's going to be to confuse how to use them. So use one moving average. I go over all of this in that free trading class, right? It's linked up below the video here tonight. It's also in that upper right-hand corner information page there for you, right? So again, very difficult to find a channel here. What I'm doing here is I'm literally marking up that low, bring up to that high, and it does look like that's going to be your best fit for finding that level of resistance. So if I had to guess, where's the best level of resistance, I would say it's this channel coming down. I want to go up, get into that level of resistance, let those buyers try to buy the pullback. Now we know where their stops are. We can look for that two-try failure pattern into that hidden channel pullback pattern, right? And again, you're going to want to take that free trading class linked up in the description to learn more about those patterns, right? Because we got to keep moving here tonight. So that's going to be the easiest way, right, to make our money tomorrow. Again, if we do see it up, hold, and go, well, now obviously the ball game has changed. Now we're looking for that new channel, right? And we're trying to buy off of that low. I'll be very surprised, though. I'll be very surprised if that doesn't take a small miracle to happen tomorrow. What's more likely is we go sideways, right? We're going sideways. We see the market consolidate, whether it be a triangle or double tops, double bottoms, and at that point, it's one try, it's two try, it's strong signal, right? It's good signal, and we're selling back down again. As we roll lower here, keep your eyes on the top of that channel. Would love to be able to combine the top of that channel with a trap pattern. Trap into two try, right? Trap into two try, into pullback. I mean, that will be the ideal if price goes lower. Trap high into two try failure pattern, into hidden channel pullback pattern, right? For that run lower. A lot of what happens tomorrow will set the stage for the rest of the week as well, because they're just there. Again, there's no real ranges to work with. There's no real measured moves to work with. So really tomorrow is really going to set the tone for the rest of this week. And of course, we'll put the plan together tomorrow night, right, once we know more information. So the S&P, boy, what a move today. Most important thing right now for the S&P traders out there, don't be a hero. Don't try to call this bottom, right? Ignore your indicators right now, except for that moving average, right, and those channels. Now, over to the Nasdaq. I was tempted just to lump this all into one because the Nasdaq is almost identical here to crude oil, to the S&P. Clearly bearish with a big bad runaway channel here. And I call these runaway channels because really all you can do is find that last kind of pivot, right? Find that last pivot, draw it across that low, and you can see, I mean, maybe it is, right? Maybe it is. Maybe it's more like this. Maybe we take that low up to that one. Maybe that fits a little better. That might fit better right there. Honestly, it really doesn't matter. It really doesn't matter. Momentum is so bearish right now. We just have to get up off of this low, right, and get this party going back down again, right? That's the big thing right now. So I call these runaway channels because your guess is as good as mine, right? Go low to low, up to that high. It looks like that's going to be a good fit, but you're gonna find out that, first of all, these types of moves don't happen very often. So don't let them beat you up too bad if you miss some trades today, or if you said, man, why didn't I hold it to close? Well, come on. If it was that easy, right, selling every pullback and holding everything to the close, we'd all be rich, right? It doesn't work that way. These are so rare. You'll be lucky to see a dozen of these a year, right, once a month. So it's very difficult to say, well, I shoulda, coulda, woulda done this. Remember, the path to being a successful trader is you've got to think in terms of probabilities, right? Sometimes the markets are really crummy, sometimes they're really good, sometimes they're bad, sometimes they're really good, sometimes they're bad, sometimes they're good. The key is to find that strategy that works during all of it, right? That's the key, right? I don't want a strategy that only works well during really strong trends, or a strategy that only works well during really narrow ranges. I want a strategy that can take a little bit of a slice out of each one. You know, the old surfing analogy, right? You're not surfing the whole wave, right? You're grabbing a third of that wave. You're not trying to grab the whole entire wave. It's impossible. You can't get into it early enough, right? And you can't hold it long enough because it'll break your board, right, on the beach. So the bottom line is we're looking for that 30%, right? So if you can get 30% of this move, you are by far outperforming the rest of this world when it comes to trading. So don't let markets like this, don't let days like today make you step back and say, man, I can do better. What you need to do is have a strategy that works in range-bound markets as well as trending markets. That way, no matter which direction that pendulum swings, you're going to be ready for it. Bottom line is we're bearish. We know we want to be selling at resistance. I've got levels of resistance now marked up overhead. I've got my, again, channel high coming down. Maybe it's the channel, maybe it's not. These are so rare like this that it doesn't make much sense to go beat yourself about it. Most important thing right now is we have those three, right, different scenarios. One, we go up, moving average comes over, buyers try to buy the pullback, right? They fail. We can then look for that sell, right? Look for that sell into their stops. With enough space to go down to that low, we can now look for that hidden channel pullback, right? Two try failure into hidden channel pullback, looking for those buyers to fail and run back down to retest that low. Or maybe we go sideways here. We start seeing double tops, double bottoms. We start seeing a triangle down here, right? The moving average goes sideways on us. Then what do? We want to get up above that moving average. One try, pullback. Two tries. Let those buyers try twice, right? Let them try twice. And then we'll look for that big sell, right? That sell signal, right? And again, you'll learn more about all the signals inside of that free trading class, right? Below the video or in the upper right-hand corner, right? Those sell signal, right? And send that sucker back down again. Or maybe we keep going lower here, right? We keep going lower. We keep grinding lower. At that point, mark up those prior swings, right? And again, we're looking for that combo trade, right? That combo pattern. Trap high into that buyer failure, into that pullback pattern, right? You've got that trap high into that two try failure, into that pullback pattern. Guys, you'll see literally hundreds of examples of traps, two try failures, and those pullback patterns by grabbing that free trading course linked up in the description of this, right, of this video. So that's the plan if it goes lower. And then again, right, how do we turn bullish? Strength, pullback, strength. Remember, don't force it. If it fall, right, if it collapses, we're going to be selling that back down again. Look for that jump. Once we get that jump, then we know the bears are leaving town. We can mark up that prior high, mark up that new channel, and we're looking to buy down around that low, right? Nice, easy objective here, going back up to that 72, 62, and potentially even more tomorrow afternoon. So, although we'd love to see a short covering rally, don't hold your breath on it, right? Momentum is way too bearish right now. And again, you cannot rely on indicators on days like today. All right, a little bit change of pace here right now from some very strong kind of neck-breaking trends today to some ranges now. We get the gold and the euro. Gold is bullish with a trading range and a hidden channel on the chart this evening. The trading range has a bear bias. This is the same range that we talked about in last night's newsletter. And that bear bias tells me to sell up above the top of the range, right? So there's my bear market into that trading range. And of course, as we talked about here so far, sell above that high, right? Sell above that high using that two try rule, right? One try, two try, back down we go. One try, two try, back down we go, right? You can easily see that two try rule is effective during ranges. Well, now Look at that short-term push higher here right now. Now, this could easily be just a negative correlation, right? What's bad for the stock market, right, is good for gold. It's pretty easy to see how this could turn into a short covering rally. The bottom line is it's too early to call this a bull market right now because we haven't held a pullback and we haven't seen that 1, 2, 3 breakout or that 1, 2, 3 reversal. But nonetheless, though, the short-term momentum is clearly bullish, and I don't want to just blindly sell. I'm at a level of resistance. I'm up around that range expansion level at that 98.6, right? We talked about this last night. We took that trading range, copy and pasted it up. That creates resistance. Copy and paste it down. That creates support. So here we are. We're up around that 98.6 resistance, but it's always critical that you ask yourself, what is the short-term momentum right now? Right? What is the short-term momentum? Right? Take a paper airplane and throw it in the wind, right? What direction does the airplane go? Right? Right now, that short-term momentum is bullish. There's way too much momentum now to be selling this. So what I want to do is I want to wait for those buyers to try to buy this pullback so I can then turn that momentum back in the bear side when we run their stops. And that will be that 2-try rule, right? So here we go. Strong move up. Right? Nice strong move up here, but we've seen plenty of strong moves against the trend so far on this gold market. I won't be impressed until we can bounce off that moving average, hold that pullback, and run. Then I'll be impressed. Then I'll call this a bull market. In the meantime, though, I'm looking for that pullback. I want to see these buyers try again. Right? In my eyes, that second pullback, that second attempt, that's where we get the most amount of information. Does it jump off the moving average or does it struggle off the moving average? A lot of times a reversal, you'll know it right when it jumps off that moving average. You'll know it, right? Those buyers can't get enough of it. They're buying everything they get their hands on, right? But sometimes, though, it kind of gets below it a little bit, it pops up, and then you know this is not a bull market yet. At that point now we know where their stops are. Now we know buyers are in. If they weren't in on the original breakout, they're in now on that second attempt, and now we can look for that nice signal, which again you'll learn more in our classroom sessions. It's also covered right inside that free trading class, right? The right signal, and we can sell back down. Now remember, you've got that trend line coming in from below, right? So make sure you're aware of that, right? That's going to be a really good target for the first target, second target, of course, down to the opposite side of that range. And then don't forget about the pendulum swing. If you have the capital, right, for it, don't forget that pendulum swing. We go up, we should end up right back down, right? So if we can get that sell off the high, quick target off of that rising support trend line, and then holding that runner to see if we can get that pendulum to swing, see if that momentum will shift right in the opposite direction. Now, don't forget too, if we hold that pullback, right, we have a strength move up, no doubt about that. If we get that pullback to the moving average, we explode higher here now I can use that high, mark up that high, find that new channel, and we're looking for a short covering rally back up to that 1210 area. Now, speaking of a short covering rally, very, very important. We're talking about market psychology tonight on this newsletter. What is the psychology of a short covering rally? Urgency, like 911, get me out, the market will jump. So as the market turns bullish here, again, if it turns bullish, you can expect this move to be very, very aggressive. What that means is if you're waiting for deep pullbacks, we may not get them. Your best option in a short covering rally, and how will you know it's a short covering rally? Because you won't see any deep pullbacks. If we see that short covering rally, now your job is to find those prior swings, and it's traps. Right? It's traps, because there's going to be a sense of urgency there, and it's not going to be buyers buying. Remember, that's one of the hidden reasons why you're not going to get deep pullbacks if we get a short covering rally. Think of what the name says, short covering rally. It's the sellers, the short sellers, who are covering their positions, right? They're now buying back their positions, and that's what causes these markets to jump when the market is bearish and then turns bullish. So the bottom line is, if you're waiting for that nice deep pullback on a short covering rally, you might be waiting until the end of the day tomorrow, because we may not get it. It may be too strong, so you have to be more aggressive. And you'll know it's a short covering rally because of personality. It won't pull back to the moving average. You'll see everybody buying everything they can get their hands on. You'll kind of sit there and go, who is buying like this? It's not the buyers, right? It's the sellers buying, because all they're trying to do is get out of their short positions. Let's wrap it up tonight here on that euro, right? Euro, of course, now is back up to the high of that range. We talked about this last night on the newsletter. If you missed last night's newsletter, you definitely owe it to yourself to go back and watch at least the section on the euro, right towards the end of last night's newsletter. If you're on the YouTube channel, it's all linked in a playlist here. If you are on the blog, just scroll down. It'll be the next video, below this video on our blog. Euro is bullish with a trading range, channel, and a measured move on the chart this evening. The bulls have the momentum at this point, but we're trading at the high of this range, right? This is the range we talked about in last night's newsletter, right? We talked about that failure, right? That failed failure we talked about last night. Buyers got all over it, right? They got all over it, and they're back up now, right, to retest that high. Momentum is bullish, okay? Momentum is bullish. And there's no telling, right, how much further this market will go. You've got this potential measured move, right? That measured move puts us right about 16,200. And then remember, the amount of the move below the range can also translate into the amount of the move above the range here. So it's very important that we don't try to just sell this market right now. What I'm looking for is I'm looking for another one of those failures coming off the high. So let's think about this right now. Let's think about this. If I was a buyer, right? If I'm a buyer, I've got price now running higher, and you'll notice we're seeing two try failures, right? Two try failures. See these two patterns right here? Great example. The opposite direction, of course, of what I was talking about on the S&P, crude oil, and the Nasdaq, right? When the market is bullish, right? When that market's bullish, you're waiting for it to get below that moving average, let those bears sort of sell it, and buy rid of their failure. This is the definition of buying low. Most people learn buy low, sell high, but they don't really execute it properly. Buying low does not mean buying a pullback, right? It means right before the market reverses, you would look for that reversal to fail. Most reversals, statistically speaking at least, are going to be unsuccessful, right? So you'll notice that two try failure pattern, right? The bears try once, the bears try twice. We know where the stops are, and we're buying right into those stops. You can see some great examples. In a bear market, it's right here. One try, two try, back down in. In a bull market, one try, two try, back up in, right? That kind of failure we talked about last night on the newsletter. So knowing this now, we've got that move, that another two try going higher here. What I'm looking for is, for example, let's say we go up, I want to look for that failure right there, right? That's the plan here for tomorrow to sell off of this high. So let's zoom in closer here. Again, I'm expecting this market's going to want to go up again. Again, we got all that reason to think this market will go higher. I can't sell this because I don't know how far it will go. And for all I know, it'll keep going forever tomorrow, right? And will be a bull market. The bottom line is I want to sell off the high, but I have to wait for all the buyers to finish, right, throwing all their junk at this thing, right? The buyers are going to want to buy the pullback, right? The buyers are also going to want to try that trap, right? That failure, right? If this is a bear market, that will be a failure, and we could sell that failure down, right? It's not a bear market, though. It's a bull market. So what I'm waiting for here is I'm waiting for that trap to fail, right? That's going to be the secret sauce for tomorrow. So again, let these buyers try to buy the pullback. Let them try to take that trap low. You're more than welcome to buy this, but it's not a very reliable spot to be buying up here. Let those buyers, right, by that trap low. And boy, will really be a treat tomorrow if we can incorporate the underbelly of this little channel I've got going on, right? Get that nice strong signal, and let's sell this sucker right back down again. So again, you can't sell now, right? Well, you can do whatever you want right now. It's your account, right? I can't trust the sell right now, and I can't trust the failure, right? I would know, again, if it was a bear market here, if it was a bear market, I would say, yeah, one try, two try, fail back down, right? One try, two try, fail back down. This one, right? One try, two try, fail back up, right? I'd be fine with that if we're going with that momentum. Momentum's too bullish though. Let's go one try, two try. I know you're going to see buyers waiting down there to buy that thing. But once those last, right, once they try buying the pullback, then they try buying the trap. How many more bullets do you think they're going to waste on that buy side? Probably not that many. And that's my goal, right, for tomorrow. Now, I know what you're thinking. Well, what if it is bullish, Joe? What if we keep going higher? Then what? Perfectly fine. Let's get a breakout through this measured move area. I know it always is tough to let it go without you, but hey, it's a range. And we've seen so many times where ranges look like they're going to be easy breakouts, but what do? They run up, they stall out, right, and then collapsing back down again. So what I want is, I'm going to want to see a strength, pullback strength, right? That 1, 2, 3 reversal, same type of situation here now, but going through the high of this range. Then mark up that high, mark up those channel levels, and then we're looking to buy on the pullback. All right, guys? So 1, 2, 3 reversal can also be applied to a breakout environment. We've really got to get through that 16,250, 16,300 on strength tomorrow before we can even trust this range breakout. Looking to sell off the highs with another one of those failed failures. It's basically a trap failure pattern off those highs, right? And of course, if we do break out, we'll look for that new hidden channel as we try to make a monster, right, short covering rally back up to some of these highs around 17,000, right? And of course, we've got potential for a huge run back into the 18,000s, but that obviously takes some time here, and we have to see proof that these buyers can take control first. Looking good, guys. Now we get the plan ready for tomorrow. Now all we have to do is go execute the plan correctly. That's where our trade room comes in. It's all between the ears, right? The average trader is successful not because they have the fanciest computer or the best strategy, but because they know how to keep it together between their ears. Trading is all about strategy. It's all about skills, but more importantly, it's all about mindset. I teach the mindset in our beginner classes, I teach the skill sets in our intermediate classes, and I teach the strategy and execute that strategy every day in our trade room as part of our advanced classes. Don't forget, I've got a toll-free number right next to my ugly mug on the homepage. I get a great free trial. Find the button right on the homepage of School of Trade. Don't forget, you can always find all the links in the description of the YouTube video, and holler at me if you get any questions on live support. I'm always here to help every step of the way. I've taken up way too much of your valuable time. Thank you so much for joining me here this evening. Don't forget, give me a thumbs up if you liked the video tonight. Subscribe to the channel while you're at it, and feel free to share the link with a friend. My name is Joseph. We'll see you guys tomorrow morning, 8 o'clock Eastern time. Capiche? Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.